Hey everyone, so Tesla has been a gem of a stock to own in 2020. The annual return for this consumer cyclical was a cool 743.44%. I'm going to say that again so it can really sink in. 743.44% gain in 12 months. With the recent euphoria in the stock market, it may be hard to get a perspective on how impressive that return really is. But let me try. It would take you a little bit over 20 years to get the same return from the S&P under normal conditions. 2 decades of investing achieved in 12 months. Makes you wonder what's in store for investors in the future. I think it would be foolish to expect this trend to continue for a long period of time. But on the other hand, nobody really knows what will happen tomorrow. So why not have an optimistic outlook on the future? Today, I want to show you a few stocks that have crushed Tesla's impressive return over the past year. Maybe you've heard of, or better yet, own a few of these stocks. And if not, maybe you can use this information to find the next hot stock. I believe every person has the ability to have an edge on the average investor and find great stocks. I will offer some advice on how you can do this at the end of the video. Before we get started here, I just want to state this data is as of market close on January 25th, 2021, and Tesla has a 1-year gain of 643.24% for the past 1-year period. Without further ado, let's take a look at the first impressive stock. And that stock is BitDigital, the Bitcoin mining company, ticker symbol BTBT. The stock is so nice, they abbreviated Bitcoin twice. The stock has a 1-year return of 4,271.87%, about 6.5 times that of Tesla's gain. Of course, they have greatly benefited from the rise in the value and news of Bitcoin recently, and according to their website, they are one of the largest miners listed on the Nasdaq. If we take a closer look at BitDigital, we can see that they shifted their business to mining Bitcoin at some point during 2020 from their previous business model of car rentals. That seems like a logical business shift. Hey guys, how can we expand our current car rental business? Anyone? I know, let's mine crypto. Yes, that's a great idea. I'm just joking here. Let's give them the benefit of the doubt. It's not uncommon for businesses to shift to new industries. They are still in the car rental game, as you can see on their website. So they are essentially in 2 lines of business now. However, recently, as we can see here on this Motley Fool article, J Capital Research issued a report accusing that BitDigital is a fraud. Oh no. Essentially, they state that BitDigital isn't mining Bitcoin at all. If these accusations are true, this is horrible news for investors. The stock price doesn't seem to be fazed by the report right now, so maybe it's not true. It's possible this could just be a short seller trying to turn the momentum of the stock for a quick buck. I don't know enough about either company to even speculate on this matter, but I'll leave a link to that report in the description below in case you'd like to read it. Interestingly, I was able to find out all of this information within 10 minutes of just looking at this company. Either way, whenever you invest in a hot new stock, you need to be careful because fraud and schemes occur all the time. Always do your research and use credible sources. If you're enjoying the video, help promote it to more people by clicking the like button. And subscribe so you don't miss future videos. Our second Tesla crusher today is Renesola Power. You guessed right, they are a solar power business. More specifically, they develop solar power projects in 10 countries with a focus on the United States and Europe. The solar industry has been hot recently, just like the heat it uses from the sun to generate electricity. Well, actually, sunlight is the more popular form of energy harvested by solar panels, with thermal energy being less popular. Renesola Power, ticker symbol SOL, has a 1-year gain of 2,296.43%. That's about 3.5 times that of Tesla's gain. The solar industry, and more broadly the green energy movement, will probably continue to be hot well into the future, but picking the right players is the trick when it comes to investing. Renesola Power has a lot of momentum from the prior year, but if we look further into the past, we can see that its long-term history is a mixed bag of huge gains and huge losses. In 2008, the stock peaked around $130 per share, then plummeted to $10. It then recovered to about 50% of its all-time high in 2010, followed by another fall with a smaller run-up in 2013. Since then, it's been on a consistent downride, dipping below $1 per share as recently as May of 2020. And as you can see by the past year's gain, the stock has skyrocketed since mid-2020 through now, rewarding shareholders with massive gains. But not all shareholders. If you happen to be a long-term shareholder since 2008, you're probably still down about 50%, barring any further investment on dips. I know nothing about this company, but I bet there is an interesting story linked to their ups and downs. Catching a massive run-up, like that of Renesola Power, is a combination of skill and luck. You can be a very intelligent investor, but if you don't think that being at the right place at the right time has an element of luck associated to it, you may be a little foolish. Up next is BLNK Charging Company. And yes, they do make chargers, but their chargers are used for electric vehicles. You could argue that without Tesla's disruption of the automobile industry, BLNK may not be where they are today. And you'd probably be right. Matter of fact, BLNK, ticker symbol BLNK, is currently sitting on a 2,063.41% gain for the past year. That's about 3.2 times as much as Tesla's gain. BLNK Charging Company owns and operates approximately 23,000 charging stations and leverages their strategic partnerships in many industries to corner the market. The auto industry will probably continue to shift to more electric vehicles, so demand for charging stations will also probably continue to increase. BLNK can see high growth in the future, but the question to ask is their share price already bid up above reasonable values with the overall market being so hot? That's for you to decide. Number 4 is Kirklands. No, not the generic Costco brand of products we all love so much. Kirklands is a home decor retailer that sells a variety of nifty items to brighten up your house. Their ticker symbol is KIRK, and it has rocked a 1,758.94% gain over the past year. That's about 2.7 times that of Tesla's gain. If anyone is familiar with this company, they may be wondering whether this is a case of deja vu. That's right, this isn't the first time Kirklands has rocked such a high one-year return. If we look further into the past, at the 10-year stock history, we can see Kirklands is about even with its 10-year all-time high price after this recent run-up. The company's trouble wasn't caused by the pandemic of 2020 either, seeing how their price started to head south at a rapid rate around early 2019. The company was late to the online game, and faithful shareholders paid for it. But now there is a lot of positive sentiment that online growth can bring them back. If we look further into history, you can see Kirkland's stock plummeted once before, starting in 2003 and bottoming out in 2008, followed by a massive run-up and then pretty much nothing until we get to the past year, and we already know what happened there. Look, I don't know much about Kirkland's other than that my wife occasionally shops there, so I won't speculate on their current stock price or where it may go, but the recent run-up was impressive. Note to self though, if they dip back to $1 per share once more, I'll have to take a flyer on them. And number 5, Novavax, a late-stage biotech focused on, wait for it, vaccines. I think any biotech that focuses on vaccines has generated more attention in the past year. Novavax actually is working on a vaccine for COVID-19, which I believe is currently in the trial phase. The stock, ticker symbol NVAX, has enjoyed a very good year, running up 1,690.97%. That puts them at about 2.6 times ahead of Tesla's gain. If we look at the past 5-year return history, we can see, however, the stock is in the red by about 4%. Ouch. And if we zoom out to their max history, we can see it's been one heck of a roller coaster ride for long-term shareholders. It's not uncommon for a lot of stocks to have these price patterns, especially as prices get hyped up on good news or an optimistic outlook on future prospects. It's difficult to speculate whether Tesla or any of the 5 other companies we just looked at will have another stellar year, or if a massive correction is on the horizon. One thing is for certain though, there is a distinctive difference between investing and speculating. While both actions strive for the same outcome, the expectation of achieving a profit on your money, investing is more targeted and based on research, and speculating is more akin to gambling. Think of it as making an educated guess versus a random guess. I think there is room in all portfolios for a fraction of speculative investing. How large that fraction is depends entirely on you. The downside to allocating 1% of your portfolio to speculative stocks is minimal. The upside may not turn you into an overnight millionaire, but it won't put you in the poorhouse either. I hear the following statement all the time. The share price is only a penny, so if it goes up to $1, I can make 100 times my money. What's the downside? Well, the downside is that you can lose all the money you invested in the stock if it goes bankrupt. How about if the share price falls and the company decides to reverse split their shares? You can lose 50% or more overnight. I don't want to be overly pessimistic here, so I would actually encourage everyone to invest a small portion of their money into a speculative company on the off chance it does grow exponentially in the future. If your investment is small relative to your portfolio, the upside, in my opinion, is worth the downside. Having said that, I think it would be wise to do some research and use any advantage you have to increase your odds of selecting the right investment or investments. We are all experts at something, be it your profession or your hobby. There is something you know more about than the average person. You should use that knowledge to your benefit. Focus on that sector, that industry, and you're more likely to see quality investment options than the average person. Let me give you an example. Say you like shopping for home decor, and Kirklands is one of the stores you like to purchase items from. Perhaps over the course of a few weeks, you notice that they are making changes to their website, and the shopping experience is becoming significantly better. Something like that is an advantage, because you may be able to notice that change before some analyst sees it in their financial data. I know it's a rough example, and it may not apply to you directly, but that's how some of the best investing ideas are born. Have patience and give it some thought. Think about what interests you and do some research online. If you focus on your hobby, it won't feel like boring research or work, and you're more likely to find a great hidden gem than the average person. To help you in your search, you can use a free screener like the one from finviz.com to amplify your search. There's an option to filter stocks by sector, by industry, and many other parameters. Personally, I prefer the old school, long-term investing approach, focusing on quality companies. However, I do take some risk with funds that give me exposure to faster growing industries. I have less than 10% of my overall invested assets allocated to these risky, in my mind, funds, and thus far they have worked quite well for me. I wish you all the best of luck in your investing journey. Let me know in the comments below if you have owned any of the stocks I talked about today, and were able to enjoy some of those phenomenal gains. Thanks for watching. See you next time.